the regard of the third point, covered topics will be how to convert public money to smart money, and especially how to bring all stakeholders at the table. And I think the following panelists really do have a lot to say. And I'm inviting the moderator, Michael Gold, CEO of Crimson Capital USA, based in various countries of the Balkans. Michael, please. Then, Emre Yilmaz, CTO of Tech Design from Turkey. Welcome. And Youssef M. Hamidadin from Innovation and Change Advocate from Early Stage Fund Management from Jordan. Gentlemen, the floor is yours.
Yeah, you should switch, because there's just the three of us. Hello, everybody. It's a pleasure to be here. I will start off with a disclosure. My name is Michael Gold. I'm the managing director of Crimson Capital, and we have 3 finance funds that support micro, small, and medium enterprises. They happen to be located in the Balkans. We do finance existing companies as well as startups. And I think at the World Business Angels Investment Forum, I'm thought of as the black sheep because we finance startups with what we consider smart money, but instead of equity, we use exclusively debt. So you can imagine my position in that case. We also work with equity funds and accelerators. But I'm very pleased to be on this panel with my esteemed colleagues. And what I thought I would do is summarize some of the things we've heard during the conference to set the stage. At a conference like this, entrepreneurs could get the impression that almost all entrepreneurs get finance and they get equity finance, and that the usual case is that if they are a startup and they get finance, that they'll be the next unicorn. Well, the reality is actually quite different, and that doesn't mean that equity finance, angel investment, and VC isn't important, but it's important for entrepreneurs to know the actual environment they're working in. So just quickly, in the US, the most vibrant startup market in the world, less than 1% of all startups get any external finance of any kind. So keep that in mind. 1 in 100 startups in the most advanced startup and equity market in the world. Less than 2% of all existing companies in the US in a given year get an equity investment. So it's rather the exception rather than the rule to get finance. People talk about stock exchanges, that's the goal for an IPO, but recognize that in any country in the world where there's a stock exchange, less than 0.04% of businesses are listed on a stock exchange anywhere in the world. So these are some of the things we think about. And then in terms of scale up, as the gentleman from Deloitte said, they studied over 400,000 startups in 24 countries over 10 years. And only 1 in 200 ever actually achieved scale up. We also heard from some of our angel investors that approximately 11% of angel investments actually get a positive return. So with that background, I think it's good to talk about the ecosystem and what can be done. And we came up with just some sample questions that I'd like our panelists to address. How can, as investors, we improve our screening and selection process so that a higher percentage of the companies actually become successful and we as investors get a return? Because it's important for both us as investors and the entrepreneur. And when only a small percentage of 25% of startups are actually designed for scale up, it asks the question then, why do so many investors invest in companies that aren't actually designed to scale up and how can we improve that. The EBAN study said that 59% of angel investment is made in the investor's home country. Well, that makes sense, because you're familiar, and as Charles mentioned, he wants to meet face to face and shake hands to develop the trust. But how can we improve cross-border investment, and how can we accelerate exits, so the return to the investor and the owners can move on? What can governments do, and corporations as well, corporate investing and investors do to catalyze technology transfer, because so much technology is in universities and not where it can actually be brought into businesses, invested in and scaled up? And is there a role, as was mentioned, about public-private partnerships, and how can that accelerate? And so with that, I'd like to start with Yusuf and get your perspective. Pick any of the questions.
Well, I think the first thing is, coming from the region that I represent, coming from an Arab country, and I think the first point that one wants to look at is the comparisons need to take into consideration the fragmentation of certain markets versus the consolidation of a specific market. So when we compare, or we talk about the U.S., we talk a lot about a 300 million plus population. States are countries in terms of size and population figures, but it's one unified space. In our case, I think a lot of the points that you mentioned, like cross-border investments, or talking about that people invest within their own local country or local community, needs to think cross-border, because by nature, if you take Jordan, for example, Jordan is a small country in the vast region of the Middle East. I mean, you have Turkey, an 80 million plus country. You have Egypt right next door, around another 90 million population. So running around 7 million to 10 million, depending on if you include refugees at this current stage, you more or less are a small market. So validation becomes more or less the platform that you stand on, and then you can roll out, and we have some recent successes. Most recently, Amazon bought Souq.com for around $750 million, which was a major acquisition for the region. That was a Jordanian startup that came out of Jordan, but fledged and expanded its wings and had presence in UAE and many other markets to operate from. So I think the element is more or less it's the size of the market and the challenge that we face in terms of fragmentation, and how we want to overcome that fragmentation for market potential and also for investment potential. That people invest cross-border should be second nature. I think the other point that you highlighted is I don't think we have critical mass yet. I mean, when you compare, or you mentioned some of the statistics and the numbers, probably even the Deloitte study, probably even if it wanted to include the MENA markets, like from Turkey to North Africa to all Africa, even, and if you even extend to Iran, Central Asia, and Pakistan, and keep pushing eastward, you won't find that critical mass is really there yet. And therefore, I think there's a lot of effort from an ecosystem development perspective that we need to push out a lot of startups into review, so that we can basically improve the quality of selection, improve the quality of the pool itself, and become much more diversified in the opportunity for investors, angel investors, to look at really good deals at a very early stage. We always tend to jump from our region and look into Europe, or even we look into places like the US. But I think that if I take Jordan again as an example, we launched the first accelerator in the Middle East at one point in time, but we still have one or two more or less accelerators still in Jordan. If we compare to Israel, which is right next to us, they're running 220 plus accelerators. So I think that and there's no logic, rather than it's a matter of focus and attention, that do we want to see startups be a contributor to an economy or not? And I think that decision has been made yet within our own ecosystem, within our own countries. Startups in some form or fashion tend to be more of a, if I may say, I mean, I ran an accelerator for a couple of years, but a novelty. I mean, it's a small community. very flashy, very much on theater, very much part of a lifestyle more or less, but it really doesn't echo the benefits that an economy wants to see and realize. So I think that's a big challenge for us, and it outlines the effort and the outcome of the work that we need to do to really deliver a strong ecosystem.
So that's a very important point. Your region is more fractionalized, and different countries are at different stages. So are you saying then, and let's say take the case of Jordan, that there really, for the ecosystem to take off, there needs to be a much more concerted commitment on the part of the government to help foster the ecosystem?
Well, I mean, I don't know if government is the entity that should be the go-to side of this exercise. Yes, I think the government has made a lot of human capital investments in Jordan, and I think it's the role of both the private and public sector to collaborate together to leverage that investment in human capital to expand on it and realize innovation that could be measured in one form or fashion, in the number of startups that are that come out of a campus, for example. So I think it's not only the government. In my personal experience, I've worked on a lot of elements. I've been the chairman of the Innovation Solution Board, articulating a strategy for innovation for Jordan. I've also contributed to developing the ICT plan for what we call Reach 2025 for Jordan. And in that, we clearly came and walked away with a realization that it's a partnership between both entities, but it should lean more towards the private sector and people interested in investing in high-risk opportunities that will give you high rewards. So I think that's a key component. Fragmentation is a big issue, and not to mention we're a very problematic place. Okay, so and that problematic element dampens opportunities. In certain areas that could become a catalyst for innovation, like a World Cup happening in the region. Many countries now can't leverage that because of political differences between different countries. Access to markets becomes really a challenging element for startups when they want to expand eastward. And so Iran becomes a problematic opportunity, although it's a great opportunity. It's 80 million people, right? So I think there's a lot of elements that you want to identify that governments, in my opinion, do not contribute on a regional basis to consolidate. Rather, they are maybe a reason for fragmentation. So I think the private sector should step up and do more and try to be that gluing element between these different diverse societies, nations, and even political affiliations.
And do you, excuse me, one of the topics these days is corporate innovation and corporate venturing. Do you see a role, for example, in Jordan for some of the corporations to take a bigger role in that regard, which we're finding in some countries is actually working, we could think of it as, impact or social responsibility. On the other hand, these corporations are finding they benefit greatly by supporting startups and early companies, and then they get the benefit of seeing that new technology.
I'm a big advocate of that, and not an advocate from a CSR perspective, but actually we've done some exercises. We're about to, so we have a very strong mandate for 2019. We want to launch 15 accelerators in Jordan, and to do so, the aligned strategy is that they're all going to be thematic accelerators. So thematic needs to be anchored by a corporate. So you talk about aviation, you talk about Royal Jordanian as an airline, you talk about logistics, you have the port of Aqaba, which is a unique place to be in. It's all the ports you want to have in one port. So you look at agriculture, and then it's anchored by an agri corporation that works in that specific space. You look at health. Jordan is famous for being a destination for health tourism or for health services in general. So I think I fully agree with you that it's a very strong way of jump-starting the ecosystem in general, and it's found a good echo. I mean, there's the responsiveness to do something that is thematic, driven by a sector, anchored by a validating partner, is the term I use, has found a lot of good traction. And I think that helps in changing even the signature. I mean, we can't copy accelerator models that come from the West. It just doesn't work in our part of the world.
That's an
we
important
are
point.
a different, we're traders. We're a different class of individuals when it comes to how we work with money and how we invest generally. So I think the thematic accelerators create an interesting angel network by design. So when you do something in the health sector, all the investors in the health sector more or less gather together in Congress and meet up. And in some ways, it's not about putting money, but maybe buying the services. So you actually jumpstart that startup by not giving it equity financing, but more or less giving it contract. So it becomes a different approach, but I fully agree with you. It's a great opportunity for us to focus on.
Everett, one of the things in our correspondence you mentioned is, how, when we were discussing how startups can scale up. I mean, obviously scaling up to me means more sales. And that was, with these studies, of course, they're average statistics and they don't take everything into account. But, the reality for a lot of young businesses or startups, taking it to the next stage and getting those sales can be the challenge. And you had some ideas of how to foster that.
Thank you. Thank you, Michael. Well, as you know, I have mainly a startup experience, so I am trying to look at these questions from the startup side. I am the other black sheep here, so to say. So what startups need at these early stages, I can say it's all about the money. Startups really need early money, and I categorize the money in two different categories. I call them inorganic and organic money. So what comes from the investors directly is inorganic money, and what the investors or the startup creates through sales, through marketing, is the organic money. So what we do at these early stages is we have to focus on the organic money. The accelerators must think about ways to create some references, some early sales, some early marketing opportunities, because there is a big difference between the money you can give directly at the seed stage or at the, maybe at the A stage, but the money that you can gain through sales is much more, much bigger. It is much more important. And more importantly, you have to create some references. Unless you have some starting points, you cannot sell anywhere. You cannot start your business. So the critical thing at this early stage is creating this organic money. And how can government help at that stage? You have to give some incentives to the enterprise companies. You have to create regulations that help the startups instead of preventing them. So, for example, in Turkey, we have some startups, some motorcycle transportation startups. We have the all-known car transportation startup, but the government always tries to prevent those startups. Instead, you have to create regulations that help them by opening their line of business. And you have to give incentives to the enterprise, as I told already, so that enterprise want to buy products from those startups. Because normally, if there are no references, if there are no incentives, no one will go and buy from the startups. Everyone will go prefer big firms, big companies. So I think the most important point from my perspective, from the startup perspective, is creating those first touch point, contact points at the early stage.
And by the touch point of those references, do you mean, like for example, first sales, creating sales that provide the reference for that company to show that they can actually make that product or deliver that service, and yes, therefore from there they can increase their sales? Is that what you're referring to?
Yes, exactly. Because it was our story, and I think I see that it is the similar story everywhere. They have the energy, they have the capability, but they don't get the chance. So they cannot show that they can do it. But for example, for us, now we have done, sold our product to 2 different banks. We have shown that we can do it, and now everyone wants to buy from us. But without those references, no one wants to buy. No matter what you show, no matter what you tell, no one wants to buy. So, but at this reference point, it was all about the acceleration. We were a part of the acceleration program. They helped us for the first sale. We have a part of the hackathon program. They helped us with the second sale, and now things are much more easy.
So what you're saying is that in places where there are opportunities for startups through accelerators or incubators or other types of programs like with corporate partnerships, things like that, that can help the startup get in the market in the first place, which then provides the foundation for further growth.
My main point is the focus should be on the business opportunities and not on the money, because business opportunities is much more important than can be much more important than money on the long term.
Well, it's interesting because there have been studies of on the long term, on average, which businesses do better. Businesses that have bootstrapped, which means they grow with money they earn from sales, step by step, versus companies that have had large venture capital at the beginning. And of course there's exceptions, but on average, bootstrap companies in many cases actually in the long term do better because they had to earn every dollar through what you call the organic
Organics, yes.
Organic money. And it's interesting from our point of view, you know, we hear about what as an investor or a financier people are looking for. And when I'm talking to a business or entrepreneur, I want to know where the sales are going to be. And often the first thing I do is say, if they don't have any sales yet, which they sometimes don't, okay, go out and talk to potential customers and find out who might be willing to buy your product if your product does what you say it would, so that they have the input from the market, and that, I think that helps quite a bit. You mentioned regulations, and the question is, should governments be looking to make regulations to in some way help business, or take away unnecessary regulations to make it easier for businesses to do what they want? Do you see what I mean?
Yes. Well, it's first of all, it's about the strategy of the government of the country. Well, for Turkey, what I believe, well, as you know, Turkey is in the middle income trap for years now, or maybe a century now, and everyone talks about how can we escape, how can we exit. Now, for Turkey, we have to do everything we can do to help this startup. So it shall be regulations to help them, incentives, and also regulations to remove, because we have big barriers too. For example, taxes. We have to do a lot of bookkeeping, so to say, to avoid taxes. We have to join programs from the government to avoid taxes. So we need both regulations to help. For example, we cannot leave our country. We need to make sales in Europe, but there is no help from the government for our travels, for example, passports. Just faking a visa to visit a country takes a month or more than a month in some cases. So government shall help us with both regulations and by removing these hindrances.
And in terms, you mentioned incentives. What type? It seems like there's a lot of positive things in Turkey, for example, in
Yes.
your country. In terms of, I've looked at the commercial code. I've looked at a lot of the laws relating to securities and investment, and which actually seem quite good. The Baybar Zaltuntas referred to the law on business angels. and interestingly was proposing that it be adopted in a country like Macedonia, for example. So I looked at that law, and that law really provides tax incentive. I mean, almost the only thing it does is tax incentives.
Yes.
Whereas in the case of Macedonia, the taxes are already at the level that that law brings to. But in the case of Turkey, because of the taxes, do you think that it's a good idea to provide a better tax regime for angel investors, for example? Will that encourage angel investors?
Well, I think I am not sure about that, because the main problem with Turkey, as far as I can see, is money. There is not enough money to help the ecosystem grow. It is not enough. There is money, but I don't think it's enough. And the culture. For example, people do not want to invest their hard-earned money on startups. They don't think that it is a viable option. But if you take the long term, if the angel investors or the venture capital can collect money from ordinary people who have nothing to do, maybe never heard the name of the startup, if they can collect their money and bring it to the startups, if we can change the culture, it will be more helpful. But of course taxes will help on that transformation, but the main problem is culture, I think.
And in that regard, there's a question of our other panelist, Ian, that couldn't be with us. He said one of the problems is that there's often a gap, what he called the valley of death, for startups that get initial funding or rounds of funding up to a certain level, and for that, the ones that do have the potential to scale up, they now need bigger money, like say $500,000 to $2-3 million, and that's often missing. And so, Yusuf, I'll ask you from your perspective, because also I would say, based on your markets with the fragmentation, do you see that something like crowdfunding for investments or syndications between angel investments and facilitating investors being able to syndicate, either of those or both of those would be helpful, for example, in the MENA region?
Well, I mean, I think I'll come back to a comment I wanted to make on how inclusive is the ecosystem and how exclusive has it become. But just to address that specific point, now at the different stages of capital raise and the journey of basically how a startup or how a project or how an entity raises capital, I think that if I look at where we are today in 2019, and if you take countries, country by country, you'll find that there's a sizable capacity of investment. There's always that issue that people might raise in terms of deployment. But if I'm saying the announced funds that are dedicated to early stage investment, looking at ticket sizes from $20,000 to $30,000, and then funds like the Wanda Fund going around deployments that can range from that $500,000 ticket size up to a $2 million ticket size. So I think if you look at the multiple funds being announced, the Circular 331 out of Lebanon, and how they've basically capitalized and shown their very strong appetite to inject $400 million into the market. So I think that if you take these examples, and the same thing you could hear in a Egyptian context, North Africa, similar situations. I really can't talk a lot about Africa in this specific case, but even within the context of the GCC countries, which have a different set of challenges due to the affluency relationship, and do people want to start businesses, and do people want to engage in that process itself? The challenge there, more or less, is that many of these funds are dedicated to nationals, and that limits the actual output accordingly. But a simple answer is, I don't think that our challenge has been today the lack of available funds from structured funds for the specific of deployment. Okay. I think it is a matter of deal flow. It's a matter of how diverse that deal flow is and how inclusive this structure is. I'll get back to the point, which is the verbatim we use needs to take into consideration that $30,000 into a startup at an early stage accelerator, pre-seed, sometimes ideation stage even, is a very impactful amount for an SME in Jordan. Okay, I mean, if you went and gave $30,000 and took 10% equity in X company, that 30,000 can have a major impact, greater than in terms of employment, what you mentioned in terms of the growth, the organic growth that they can achieve. So I think that the need is that we need to be much more inclusive, and the nature of risk mitigation and how we manage risk and the investment behind risk has created a new verbatim, angel investors. And we struggled. I mean, when we say angel networks, angel investors, we excluded families and trading families, and we just told them, you're not invited to the club. Okay. And when we did that, we suffered. We ended up basically finding ourselves in our own bubble, that every time when someone wanted as a startup to go and meet with that amount of abundant cash, you're labeled. You're a startup. You're not serious. You're not part of the value proposition that I'm used to putting money behind. And I think the more inclusive we could be, I think the better results when it comes to deployment and the access to cash. But a simple answer, today when you just look at the map and you map all the funds that are out there with their mandates and what they've been designed to deliver and achieve, no, actually I would say that we've covered up to that 5 million, 10 million. Now when you go up to the ticket size that are really bigger, $30, $40 million, we tend to see external VCs playing a role in that. Recent startups have received $75 million investments, and they've come more or less from VC money that's outside of the region, but interested in participating in the region. So I think we've covered that space. It's just increasing the deal flow is what we face as a continuous challenge.
Well, that's very interesting, because as Charles mentioned, angel investors, but I think all investors, come in many flavors. And we tend often to look from the point, and it's good from the entrepreneur's point, to help us inform the entrepreneur that there are different types, yeah, and not pigeonhole investors, just like we don't want investors to pigeonhole the startups. And so that in the universe, as you mentioned, of angel investors, there's people who are very experienced, very formal, maybe in the country registered as an angel investor. And yet there are a lot of people that have money, that have run their businesses, been successful. They would like to invest, and sometimes we just don't consider them. So, and it's important to include them.
I mean, we don't, and also the verbatim, when you take it and you translate it and localize it. I mean, angel investor doesn't have it doesn't have the right relevant Arabic translation for it, right? So the al-mujtama al-malaiki or al-mustathmir al-malaiki in Arabic just doesn't make it doesn't trigger some attractive essence to it. So it's I think we need to think local, and maybe when you want to present this class of people interested in this class of risk, call them outside that they're angel investors, but within their own local community, the more that you can broaden the spectrum itself, and let them, let the market play towards the different ends it has, and people will find more access to cash in many ways than they would find today.
This is your chance now to coin the new term in Arabic that would connote the right message. I always, it triggered when I was taking startups, because we did around 130 plus investments, and we always had these angel events, and we would invite angel investors and investor days and so forth. And it just came across one day that there was a certain group that wasn't in the room always. Okay, and when I went and extended to them an invitation, it had to be just investor. It was just simple, agnostic, if you may say, and so it was just, you're an investor and you want to grow and deliver certain returns, and there's a
there's a higher appetite for risk in this sector. Are you interested in coming aboard and doing this? We've always mentioned that the region doesn't have an appetite for risk. That's alienated the group that does have an appetite for risk, because these are trading families in very tough circumstances. I mean, they've been going and trading money from the only reason you have people in Indonesia, 200 million Muslims there, is because people were trading east-west and the whole Swahili coast of Africa. So I think that appetite for risk is something that trading families thrive on. So when we invited them, we were surprised. We were surprised that they were taking risk. They were investing behind startups. They were growing startups with their own family networks. They could jumpstart a food business that came out with a nice idea because they own the distributor network to the mini markets, for example. So all of a sudden, their contribution was just not limited to cash. It was really becoming catalysts for growth in any sector you could imagine. And so it's been rewarding so far. It's something we started since last year, and we're very much heavily interested to keep growing it further and further.
Well, that's very interesting, because that gets to, Emery, your comments about organic, in that people that have successfully operated businesses, sometimes in this sphere we might consider plain, boring, vanilla manufacturing companies or trading companies, but nonetheless, you've got this group of people that do have money and they know how to make sales.
Yeah.
Sometimes under, as you said, conditions that I would fear to tread, and yet they do that. And in startups and emerging, growing companies need sales. And so to some extent, that's where the money may be helpful, but I think that experience and expertise and knowledge of markets could make a huge difference.
Let me give you an example. In 2006, a family business went and did an investment where the patriarch of that family decided to acquire 100% a small company for $11 million. And everybody was saying this is a crazy, but it's off the page. It's not within our community of startup discussions and whatever. As of, I think, 3-4 months ago, that company was acquired at a $1.3 billion value that still is not celebrated within the startup community, right? So it's that type of experience that you want in that ecosystem, part of the ecosystem, heavily engaged with the ecosystem, and not feeling that we're alienating, we're not a part of it, because you lose experience, depth, gray hair, knowledge, this catalyst momentum that they can do to grow businesses. And they're savvy. I mean, they really know how to make money.
So I think part of the message is for the ecosystem, which we're talking about, is simply to be more open and more inclusive, and take into account all the different types of business expertise, trading, investment. Emrah, Yusuf mentioned that the problem may not be money, in the sense there is money,
yes,
but partly deal flow. What can we do to help startups and early stage companies become more professional, become more able to outreach to investors and present a better case for themselves?
Well, that's a tough question. But first of all, I think it's about the culture. What Yusuf mentioned about the trading culture, we experience ourselves to be in our company also have a culture from, we came from trader families, so we have a trading culture, and I really think that it makes a difference on that sense, on the culture of the startup. So what we can focus on that area can be trying to change the culture, trying to bring the culture. For example, we can bring people with the right culture to the company, not just money, but we can bring people that can work for the startup, that can change the culture of the startup, because the culture in startups is all about the first 5 to 10 employees, 5 to 10 workers. So if we can bring that culture to the startup, I think that can make the difference. Otherwise, no matter what you tell, no matter what you teach, you cannot change the culture. It will be just theory. It will be just talk.
So bringing practical experience,
Directly to the startup.
to the startups
Yes.
would be helpful.
Yes.
Now, one question is, in your countries, for example, in the United States, my past history was I ran engineering and medical research institutes at universities. And I was frustrated because although the U.S. funded basic research and R&D to a level at the time more than the rest of the world combined, very few advances or breakthroughs ever actually went to help somebody, because the professors would publish and then nobody would commercialize it or invest because they didn't have a patent or something like that. So I went on sort of a mini crusade at the universities to try and get faculty and students to, if there was a commercial potential, to file a patent application, before they published, with minimal delays. So they still published, but to try and do that. And increasingly we're seeing a lot of technology transfer and startup spin-offs from universities and entrepreneur programs in universities. Israel is known for this, the partnership between government, private sector, financial sector, and universities. In your countries, why don't you talk about that? Do you see increasing efforts to try and transfer technology out to the private sector from the academic settings?
First of all, I think this is a very important question, a very crucial question, and I will try to make some different connections. I will try to connect this question with the enterprise innovation, and how about the experience to the startups. First of all, the average age of a successful startup founder is 42, even more older than me. But the average age for a startup founder, especially in Turkey, is much lower. Why? People who have value, who can do something, who have the experience, do not take risk, and people who do not have who cannot bring much value, who do not have experience, can take the risk. So first of all, it all starts with the risk. We startups or we startup founders also have a homework, so to say. We have to tell them, no matter what they do, no matter what they experience, it will be their experience of a lifetime. So we have to invite people on enterprise sector. We have to invite people on the academy to the startup scene. We have to encourage them to take risk. So what we can do, we have to tell everything. We have to tell about the sleepless nights. We have to tell about how hard it will be. And we have to say, do not be afraid. Take the risk, do it. So if the academy wants to take the risk, if the enterprise wants to take the risk, then we can bring them together. Otherwise, I think it will be much harder to do with just regulations or incentives at that stage. We have to encourage them to do it.
Well, that's very interesting, because one of the things we also heard is that most of the startups that end up with very large scale-ups didn't typically start with one founder, the sole founder or entrepreneur. They were teams. And maybe this is where, the young, energetic, a person willing to take risk, maybe because they don't know what they're getting into, can team with more experienced business people. Yes. And I think,
exactly.
And we've seen examples of that. So it's not only convincing investors, it's convincing people to join your team that bring the experience you don't have. Usuf, what would you say relative to the technology transfer question?
I mean, I think a key highlight is this region is very young. I mean, we have 75% of the population is below the age of 35. Yet, we don't see that translated. If you look at the startups that do get created, or companies that get founded, you don't see them coming from campuses. So I've been coming to Turkey a lot and attending multiple activities here, but you see sometimes, you go to startup activities and you find startups that are campus driven. They're students still on campus, or they're about to graduate, but that's where their first startup started from. Across a lot of the investments we did, nearly 100%, and that's an issue for failure in many ways, 100% of those startups were ex-employees, did not come from a campus or technical background. Single founders is something that's highly problematic. So that team effect and that extension of testing and playing with ideas in a campus environment where you have a small community, you have a small village where you can do things. You have subject matter experts all over these different colleges. We don't see that a lot, and that is a continuous issue. Our response is that so far is, again, we're trying to extend the concept of acceleration to start on campuses. That we want to focus more on people with technical mastery in teams. Raise the bar. If you're not there, you're just not going to cut it and not going to get any. You're not going to join the program, let's say. And then also acceleration should include SMEs. It's not just limited to people with ideas that come from campuses, but try to bring these SMEs closer to campuses and get them to have some hybrid relationships that they can use to grow to second level achievements, basically, more or less. So that's the type of work we're trying to do there. But I agree with you, it's a challenge.
That's very interesting. We're partners in the new accelerator in Macedonia, and one of our partners is the St. Cyril and Methodius University, the biggest university in Macedonia, and we're partnering with the technical faculty. And so trying to combine access to the young, energetic students, the faculty in computer science, mechanical engineering, electrical engineering, physical sciences, and for pre-acceleration, because the kids are, and then combine it with acceleration and on the other end with existing SMEs, but also corporates to try and create, the whole flow. But it's herding cats. It's a very challenge.
I mean, to give you a statistic about Jordan, Jordan is one of the strong countries when it comes to engineering capacity and technical mastery. It ranks in some indexes, the Innovation Index or the Global Competitiveness Index. Some of them would rank it, 13, 14, or 15 in country standing. So it's quite strong in that space. Because we don't address that specific issue on campus, we lose a lot of that technical mastery to students that in their second, third year are already looking out for an exit by taking a master's degree or a PhD program elsewhere. And you lose that individual. You lose that, and it's a major loss to see that go away from you. So, if we could, then I'd love to see what you guys are doing, and invite you also to come to Jordan and see how you can collaborate in that context. But I think it's the right space to be in. It's where if you want to look at the Pareto principle of 20/80, if we focus on campuses, I think we'll do a lot.
Great. We have a little bit of time left, so I wanted to open it in case anybody had questions and also suggestions. Anybody? Okay, I don't see it. So in that case, I'll Emery, any further thoughts or suggestions that you have?
I do have these for the.
Well, I have pretty much told everything that I want to tell, and what we talked together, I can conclude that we have to focus more on collaboration. We have to focus more on bringing this experience together, and we have to focus on looking on those things from the startup sides, startups perspective. So this can be my main suggestions about this topic.
Thank you. Yusuf?
Well, I mean, I'd like to again highlight the importance of being very inclusive in our ecosystem in general. And I think the key element is numbers. we want this to be, to drive an economic, we need this. We are in a crisis and we need an economic enabler. Or we will hit a wall in a couple of years because of youth unemployment, just to take that for granted. But I think that the numbers have to increase, startups have to increase. We need to be much more adamant to create that economic impact for this to make economic sense for everybody.
That's a very good point. I think that we're seeing in a lot of countries, youth unemployment is a big problem. And what are the opportunities for them? We're also seeing at the same time the number of super large companies that employ large numbers of people is diminishing, and you see here a lot of large companies announce 5,000 layoffs, 20,000 layoffs. We're past the point in our economies where people can just rely on automatically getting jobs for the big companies. So I think that entrepreneurship, startup, growing companies, new innovation is going to be critical. And I think the lesson that you folks have said is that it's going to take a concerted effort of working together at all the different levels to do that. I want to thank my panelists very much. This has been a very... Okay, Emily, you have something?
Yes. There is one particular danger here in Turkey. I don't know how about this there in your country. Big companies becoming rivals of startups. Now, this I think is this is very dangerous for the startup ecosystem. And if one thing that government has to prevent, regulate, shall be this. So big companies playing startup is very dangerous to the ecosystem, because you take all the energy, you spend those energy on the wrong culture where it cannot thrive, and you also prevent your startups from accelerating, from becoming scale-ups. So this is one danger that I clearly see here in Turkey, and that I wanted to mention. Thank you.
Yusuf, do you see that as a problem where bigger companies are competing with startups or stealing the ideas of startups or something like that?
I mean, I don't think that. No, I don't. I mean, a simple answer is no. I think that to echo what you mentioned, conglomerates. We're a very much heavy conglomerate sector from the private side, which can't just carry the economy going forward. So I think that the focus is on the point that you mentioned, how we can orchestrate an effort towards creating more value, and entrepreneurship and startups and that community is good for wealth distribution, employment, above average income creation, which I think is what we need at this current stage.
Thank you. I think that for larger SMEs and even large companies, many of them are having trouble innovating themselves, and they're seeing that plateau or even decline coming unless they innovate. And I think maybe the way to do it is to partner with various programs with startups and things, and support those startups, and then that can ultimately be the exit for investors, right?
It is.
We had a case from the Innovation Center Kosovo, where some young kids out of college, we helped them create their company for apps. We did a major investment for them, and they pitched their idea, and an investor stood up. Angel investor stood up from the audience and said, "Can I see you right after? I'll invest." They had discussions, and the team decided, no, they'll fund themselves a little while in build-up. And now, this last year, they were acquired by a major U.S. company, and now are owners of the big U.S. company, and they're managing what is now a division in Kosovo. So I think again, the inclusiveness, we have to think of some of them former startups that now are successful companies as avenues both for financing, but for technology management experience and ultimately for the exit strategy. So thank you both very much. Thank you, audience, for listening. We appreciate it, and I'd just like to give an applause for my panel.